Hey guys, Movement Mortgage 671. If you get a loan, it's going to be 6 hours in underwriting. That's up front.
Yeah.
7 days in processing. See how they reverse that around?
They reverse it. It's better.
And then 1 day to get your deal funded.
Nice.
Do the math on how long
Pretty
it takes,
good.
and these guys deliver. They do a great job. If you want to learn more, click this banner right over there, or if you're on Facebook, right up above. So, HUD, guys, check this out. This is really big. They're making changes, or could be making changes to the reverse mortgage program. And do you want to know why?
Yes.
It's too good of a deal, and all you seniors, you're just living too long.
Dang it.
I should have took a dirt nap like 30 years ago.
That, by the way, is also the problem with Social Security.
Yep.
If you would just die sooner, we'd all be in better shape.
Just get on with it.
No.
Drink that potion, and you'll never grow even 1 day older. Don't drink it, and continue to watch yourself rot.
All joking aside, but it's the truth.
It is.
People are outliving the structure of the loan.
Interesting.
Now, you think I'm lying? Check this out.
Yeah, currently most borrowers pay 0.5% up front and then 1.25% annually over the remainder of the loan. Under the proposed changes, borrowers will now pay 2% of the amount up front of the home's value, right? And 0.5% annually over the course of the loan.
So you have the bulk of the premium, it's going to be paid up front. Now the thinking is, and I know this sounds bad, but it's gonna sound bad. But once again, it's the truth.
Okay.
If you get a reverse mortgage and you just die quick, that pays off great.
Yeah.
And by getting a large amount up front, they're hedging against you really living longer.
Gotcha. And we know this to be the case, though FHA's Mutual Mortgage Insurance Fund, or MMI Fund, is doing well, the portion that's reverse is not doing that well. The reason is, once again, these borrowers seem to be just living too long.
Okay, so let's think about this for a second. As a result, if you think about this for a second, that makes the reverse mortgage a disproportionately great loan for seniors to get.
Yeah.
If the end result of a reverse mortgage means FHA has a payout, then that loan was a disproportionately great loan for that borrower.
Right, so the senior just took so much from the loan that the lender's actually now upside down and has to make a claim against FHA.
And by the way, a reverse mortgage is a no recourse loan. So there's no way for the lender to go after any funds outside of the loan, provided the taxes and insurance are paid up front. So the concern is you're going to go to someone's bank account after they pass away or move out of that house, and they're going to get the money if the loan's upside down. That absolutely cannot happen.
Right.
Once again, disproportionately good.
Right. Well, that's why we found it so baffling that the CFPB just came out with a scare article about reverse mortgages that's built on half-baked truths. I mean, we think this was bad of the CFPB because, one, seniors are already afraid of reverse mortgages in spite of their overwhelming benefits to the seniors. Thanks, you just scared more of them off, but probably not because consumers don't listen to the CFPB.
It's a good point.
And two, your article is simply not a complete picture, CFPB. The CFPB manipulates a position by not telling the whole story.
Absolutely. In short, the CFPB claims that making use of your home equity through a reverse mortgage as a means of deferring Social Security during your early years is a bad thing. It is to be avoided if it's presented to you by an evil loan officer as a possible benefit. Guess what? That is just categorically wrong.
It is wrong. The argument is that the average life of a reverse mortgage is 7 years, and that if a senior defers Social Security from the age of 62 to 67, then the cost of the reverse mortgage will be more expensive than just waiting. What the CFPB fails to recognize is any lender contributions to the closing costs.
Right.
They also assume the senior is only going to live 7 years, and they assume the senior is in a financial position to wait to 67 when their benefit would increase.
Right.
I mean, if you're a senior
Right.
and you are in financial dire straits and you take your benefit at age 62, then your benefit will be significantly less than waiting until you're 67 or even 70. What we know now from the MMI Fund is that seniors are living longer, which is stressing the fund, and frankly, it's stressing Social Security as well.
Absolutely. It's as if the CFPB was making an argument based on the changes that we've just outlined from HUD to be announced very soon. Makes you wonder, doesn't it?
Yeah.
But in truth, the CFPB's argument fails to consider the human element in this whole damn thing. Why should a senior tough it out through the twilight of their life for 5 years from the age of 62 and wait to 67?
Right. If you can, that's one thing.
Right.
But if you can't, take your Heckem and alleviate your financial stress.
Totally.
Man. Hell, losing that stress might even extend your life.
It's true.
Then get your Social Security at the higher benefit and use both incomes to enjoy your senior years.
Truthfully, right now, guys, only 0.1% of our population has a reverse mortgage, making this a hugely underutilized benefit for seniors. And the CFPB's scaring seniors away from this loan is a categorically irresponsible move on their behalf, which further shows how little the CFPB actually understands about the mortgage industry.
That's right. And the truth is, more seniors should make use of a reverse mortgage, and they should do it before these changes are made. And the fact that they are not is a failure of our mortgage industry to better get the message out about this awesome product.
That's absolutely the truth. I'm gonna tell you something right now, guys. There's a group next to us. They're called Always Best Care Senior Services. A couple ladies over there. They have a bunch of nurses on call. And as a senior citizen, for $25 an hour, they'll come in and do whatever you need. You know, walk the dog, cook your food, clean your house, get your meds, whatever you need. And they're also checking in on you. It's an absolutely brilliant service for our senior citizens. It's absolutely brilliant. Guess what, guys? They've got 90 clients. 90. That means they've probably got about 90 clients who'd benefit from a reverse mortgage. You think as a lender you should be talking to people like this? And oh, by the way, there's 5 other companies in Solano County alone where we live, and they're one of the new ones, which means they have more clients. As a loan officer, go to these places that cater and care for seniors, because no lender is hitting them up. There is so much business in this, you wouldn't believe it. Check that out.
Yeah, and the good news is, come October 1st, we're going to be working with a reverse mortgage lender, a very reputable one, by the way.
Good.
That'll be on our show as a sponsor, and we'll be giving you guys a lot of training on this product and how to do it appropriately, because you know there can be snakes out there, but we certainly wouldn't operate that way, and this company certainly doesn't operate that way. They're very much above board, but we're going to teach you guys how to get this stuff done, how to market, how to do everything. So, with that said, stay tuned. We'll talk to you guys later. Leave us your thoughts and comments down below. Do us a favor and share this. If it's on Facebook, just hit the share button.
Tag friends.
Really tag your friends, really easy to do, right? And if you're watching us on our website, there's a subscribe button in your upper right-hand corner. And you can also subscribe on Facebook. There's a link up above. With that, we're going to get the heck out of here. We'll see you guys later from the National Real Estate
Bye.
House.